Today on the Blockchain Report, Trump taps a pro-Bitcoin economist Stephen Mirren for the Fed because who needs boring policy when you can have a Bitcoin fan in charge? Greenidge Mining is offloading its Mississippi site because I guess tariffs are more painful than a Bitcoin dip. And Elon Musk resurrects the magic internet money meme because nothing says Bitcoin is here to stay like low-res cartoons and AI magic. All that and more right now on today's show. Let's go! Good morning, my crypto comrades, and welcome back to another episode of the Blockchain Report. I'm Hank Hudson, broadcasting live from the land of overpriced avocado toast and self-driving Ubers. Yeah, you guessed it. We're talking San Francisco, California, where the scooters are perpetually broken, the lattes could buy you a small car in some states, and everyone's still pretending their tech startup will be the next big thing. It is Friday, my people. Thank the good Lord and Sailor. That sweet spot between work week regret and weekend denial, the day where we're half celebrating the fact that we made it through another week, half bracing for the existential dread that Monday is just around the corner, lurking like a bear in the woods. Now, before we dive into the dumpster fire of crypto chaos, let's do the responsible thing and smash that like button like it's your prom date in a 90s coming-of-age teen comedy. And follow RoxomTV and yours truly at Hank at RoxomTV, because watching this show without engagement is like staking your coins in a rug pull. Now, whether you're tuning in from your penthouse in Dubai, a tiny hut in El Salvador, or that Trader Joe's parking lot where you're pretending to work while waiting for your cold brew to kick in, grab that cold, half-finished cup of productivity juice, pretend you're on mute during your next Zoom, and let's dive into why Friday in crypto is less about end of the week and more about, oh boy, here comes the next narrative. But first, let's see what the markets are whispering in this morning's Market Rundown. Let's do it. All right, it's Friday, and is it looking good this morning? Yeah, it's okay, not too bad. Right now, Bitcoin hovering around that 116K 5 mark. We were around 115 yesterday. We even saw it surge all the way up to 117 in the earlier hours this morning, but we've seen a bit of a pullback, but at least we're generally headed in the right direction. Ethereum testing that $4,000 mark. It was up there this morning, just above it, but now it's retraced back to about 3,966, but still good enough for almost a 1.5% gain in the last 24 hours. XRP sitting around 325 this morning, down 2% overall. Cardano is sitting pretty at about 78, 79 cents a coin, and Dogecoin standing pat at about 22 cents a pop. In TradFi, let's see how the stonks are doing today, and not too bad. Not a lot going on, though, in the whole. Dow Jones is up 167 points this morning. The NASDAQ is up 173. That's almost a 1% gain overall in the market. And the S&P 5 is up about 42 bucks this morning. MicroStrategy, they're down $3.50. Tesla up 3% this morning. Elon's doing something. Coinbase, they're down over 2.5% to 302 a share. Nvidia is up 1.3%, sitting around 183 a share. And GameStop, not doing much of anything. They're down almost a percentage point this morning, right at 22.44. All right, and we're back. Sorry that took a little longer than usual, friends. We had this bird that entered the studio a few weeks ago. I'm pretty sure he's living in the walls and just biting through all the wires. Technical difficulties. It's a live show after all. Let's get to it. This morning's Bull Run, where we go over the top stories of the day. First up, Bitcoin picked up a tiny 1.9% gain to 117K yesterday because the US and Japan apparently decided it was time to stop flirting and actually invite big money into the market. First up, the Trump administration dropped an executive order letting Bitcoin and a few other cryptos into 401k retirement plans. That's $12.5 trillion in U.S. retirement assets now legally allowed to wander into the Bitcoin market. Analysts are calling it a pivotal shift in institutional adoption, a mainstream legitimacy boost, and a move that could speed up long-term adoption, especially as traditional finance quietly stops pretending it doesn't understand crypto. Meanwhile, over in Tokyo, SBI Holdings, Japan's biggest financial services company, launched the first Bitcoin ETF on the Tokyo Stock Exchange. This one's laser focused on institutional investors, pension funds, banks, asset managers, and all the other suits who prefer their Bitcoin exposure neatly packaged and regular approved. Now, the launch puts Japan out in front of the institutional crypto finance race in Asia and signals that big players in the region see Bitcoin as stable enough to build serious products around. Now, together, these moves lit a small fire under the price, pushing Bitcoin higher while giving analysts more reasons to say institutional adoption until the words just eventually lose all meaning. Year to date, Bitcoin is up 25.5%, even after cooling off from its mid-July all-time high of over 123,000. Now, technical analysts say holding the 117 to 118K range could set up a run back to 122 to 125K. Slip below that, and we could revisit 112 or 113K very soon. For now, momentum is neutral to bullish, but the theme is clear. More institutional pipes are being connected, and each one can carry more capital straight into Bitcoin's very finite supply. And that's the kind of math that can get exciting very, very fast. Donald Trump is back at it, and he has tapped Dr. Stephen Mirren, an economist with a documented soft spot for Bitcoin ETFs, for a temporary seat on the Federal Reserve Board. Mirren will serve until January 31st of next year, filling a vacancy while the administration searches for a permanent replacement. In other words, he's a placeholder, but one who could still influence monetary policy in ways that matter to Bitcoin. Mirren has been part of both Trump administrations and was showered with praise by Trump himself for unparalleled economic expertise. That's the resume part. The crypto-friendly part comes courtesy of a 2024 post where Mirren mocked bears betting against Bitcoin ETFs. Before his White House role, Mirren held various positions shaping financial regulation and economic strategy. His pro-market liberalization views and apparent comfort with Bitcoin as a legitimate investment product are now positioned inside one of the most powerful monetary policy seats in the country. And this nomination isn't happening in isolation. Trump's advisors are also reportedly eyeing Fed Governor Christopher Waller as the frontrunner to replace Jerome Powell as the Fed chair. That would mark a notable leadership change coming on the heels of other pro-crypto signals from Trump's second term. Now, Mirren's temporary appointment buys the administration time to weigh a permanent pick while still installing someone who aligns with its digital asset stance. For Bitcoin, having a Fed governor who once publicly trolled Bitcoin ETF skeptics is far from irrelevant. If he shapes policy toward friendlier treatment of crypto investment products, it could influence everything from institutional adoption to how the Fed engages with digital assets in the broader monetary system. The nomination now heads into formal review. Until then, Stephen Mirren will be the pro-Bitcoin voice at the Fed table, a seat where monetary levers get pulled and occasionally the Bitcoin price chart gets an indirect nudge. And Eric Balchunas, Bloomberg's resident ETF guy, took one look at Trump's new executive order, the one that lets private 401k accounts hold Bitcoin, real estate, and private equity, and basically said, cute idea, but no one's going to do it. This is the same order everyone's calling a major win for those industries, and on paper, it's a massive door opening. I mean, about $12.5 trillion worth of retirement assets suddenly allowed to hang out with Bitcoin. But Balchunas is the guy reminding everyone that corporate plan administrators don't exactly wake up thinking, let's shake things up with an asset class most of us barely understand. Until now, these plans have mostly stuck to stocks and bonds. Why? Well, because anything illiquid and complex makes the people in charge of your retirement account clutch their respective pearls. Balchunas says all of these alternative options require a little education, and apparently most of the folks in charge couldn't tell a Bitcoin from a breadstick. His bet? The vast majority will stay curled up in their safe, low-cost target date funds, gently rocking themselves to sleep. And if you want proof that the mood isn't exactly bullish at the moment, look at August 6th. Bitcoin spot ETFs had net outflows of 1,821 Bitcoin. That's $208 million worth of "we are out of here." Fidelity's FBTC down 872 Bitcoin in a single day. That's 4,644 BTC gone over just the past week. BlackRock's IBIT off by 681 BTC on the day and 2,794 Bitcoin for the week. Valkyrie saw 79 Bitcoin vanish. Invesco Galaxy, 94 Bitcoin gone. Grayscale, another 94 BTC, waving goodbye. And it all adds up, and all 10 spot ETFs together lost 12,705 Bitcoin in a week. That's about $1.45 billion. So, yeah, your 401k can now officially date Bitcoin. Balkunas just thinks they'll keep, swiping left. And Greenidge Generation, a NASDAQ-listed Bitcoin mining company, has officially decided to sell its Mississippi site just a year after it opened its doors. Apparently, making Bitcoin just isn't as fun when your margins are thinner than a post-halving Bitcoin block reward. They're offloading the 6.4-acre site for $3.9 million to a company called U.S. Digital Mining Mississippi, which sounds suspiciously like it was made up on the fly by a marketing intern who Googled crypto mining names. This sale includes the site, contracts, mining equipment, and other assets, but surprise, surprise, it doesn't include the miners themselves or the 73,000 square foot warehouse nearby. Guess they figured, why not leave some of the heavy lifting for someone else? Greenidge's operation started back in July of 2024, relocating 2,400 miners to a site powered by 8.5 megawatts of energy, with hopes of adding 25 megawatts more within a year. Well, fast forward to now, and Greenidge is selling because they're up to their necks in debt. The company's 2021 spending spree on mining rigs didn't exactly age like fine wine. Despite Bitcoin's current price sitting comfortably around 116, 117K, Greenidge is still feeling the pain of low hash price, which is essentially the revenue miners make per terahash. And as if the mining world wasn't already competitive enough, there's a new twist. President Trump's latest tariff overhaul is making it even harder for U.S. miners to import equipment from
You are
Southeast
fake
Asia.
news.
That's right. Now, U.S. miners, hey, get out of here, Donald. Now, U.S. miners are struggling to get their hands on mining rigs, and it's about to take years to ramp up domestic manufacturing capacity. So, Greenidge isn't the only one grappling with these changes. Other miners are feeling the burn from the tariff-induced delay in hardware ports as well. In the short term, though, miners might face a rough patch as they sell off assets to stay afloat. But longer term, fewer miners operating domestically, paired with these hardware import restrictions, could tilt the balance in Bitcoin's favor, as a reduced hash rate could lower the sell pressure on the network. And that's the kind of thing that can quietly nudge Bitcoin's price upward. So while Greenidge might be handing over its Mississippi dreams to someone else, the long-term impact of these moves might just be a quieter bullish setup for Bitcoin. Thanks, Terrence.
You are fake
You
news.
got one thing right this time. Hey, I was complimenting you, Donald. Get out of here. All right, well, there are over 3.35 million BTC that have decided that they'd rather stay under their cozy digital mattress for over a decade, making up nearly 17% of the entire circulating supply. And the funny thing, well, they're not even texting to check in. According to the ever-reliable Bitcoin Magazine Pro, this stat is nothing to ignore. It's a massive chunk of Bitcoin's circulating supply doing the digital equivalent of just, napping. These coins have been dormant since Bitcoin's early years, and they are a significant part of the supply that isn't up for grabs, leaving the rest of us to fight over the scraps that still remain. Now, if you've been paying attention, and even if you haven't, welcome back to reality, this isn't just some sleepy trend. It's a signal that Bitcoin supply is about to get really, really tight. A rising number of ultra long-term holders are just letting their Bitcoin marinate in cold storage, untouched and unbothered by market fluctuations. And if you look at the HODL waves chart, it's crystal clear. More and more Bitcoin are being locked away in the vaults, creating a HODL floor that is frankly hard to ignore. When Bitcoin's price rises, fewer coins are available for trading. You can almost hear the whimpering from traders trying to get their hands on Bitcoin, only to find that their pickings are getting slimmer and slimmer. The shrinking liquid supply means that the impact of new demand could be more intense than ever before. Every time some new big player like an ETF or institutional buyer sneezes, expect those prices to really start to move. Because here's the kicker. Fewer coins floating around means that if demand picks up, the price might not just go up a little, it could shoot up like a rocket on its way to the moon, which, let's be honest, sounds really fun. The big takeaway here is that 3.35 million Bitcoin are locked away, and that's a big hodl flex, and it could trigger some serious supply shock if the demand curve takes a turn for the bullish. And if history has shown us anything, it's that when the supply is tight and the demand kicks into overdrive, we might be looking at a price that will make all of us look at our portfolios and scream, to the moon, baby.
Boy!
That's right. Hey, Flavor, good to see you this morning. And in other news, Elon Musk, well, he's at it again doing what Elon does. And no, it's not another tweet about Dogecoin, though we know that's coming eventually. This time, it's a throwback to magic internet money Bitcoin meme. You know, the one that's so low res it looks like it was created in Microsoft Paint during the dial-up era. There it is. It's so weird what goes viral. But in true Musk fashion, he's brought it back to life using Grok Imagine's new multimodal tool, which basically animates images because why the hell not? Who needs high quality visuals when you can bring a pixelated meme to life with the magic of AI? Now, this isn't just any meme. This is the meme. The one that gained fame after a contest on the Bitcoin subreddit, and one that's become so synonymous with Bitcoin it might as well be its official mascot. Musk, the meme mogul and self-proclaimed meme lord of crypto, reposted this iconic image with a laughing emoji, which, let's be honest, could mean anything. But what's more interesting here is the timing and the broader context. The cryptocurrency market is certainly heating up, and memes, whether they're from 2010 or 2025, still hold the power to drive interest. Just take a look at the magic internet money coin price. It's predicted to rise almost 8.5% and hit $1.07 by September 6th of this year. And that's not exactly moon material, but it's a nice little bump in a market that's seeing a lot of buzz and speculation, including a neutral sentiment in the fear and greed index. It's at 62 currently. So why is this relevant to Bitcoin, you ask? Well, for starters, Musk is one of the most influential people in crypto, whether you like him or not, and his nod to Bitcoin, even if it's in the form of a meme, only adds fuel to the fire. Bitcoin's price is driven by sentiment, and Musk's antics, even in the form of a low-quality meme, contribute to that narrative. It's not just about the meme itself, it's about the influence and the attention that follows it. Elon is reminding us that the world of crypto, much like memes, is still driven by culture and community. And as we know, Bitcoin's price can be highly susceptible to both of those. So while you might laugh at the meme's pixelated charm, don't ignore the underlying message here. Musk's influence continues to shape the market, and it could have a noticeable effect on Bitcoin's price going forward.
You are fake news.
Bitcoin isn't just a store of value here, friends. It's a meme-powered, AI-driven digital revolution that Musk can't stop feeding.
Computer.
And for better or worse, that keeps Bitcoin in the spotlight, even when it's animated in low resolution. And Paul Ardoino, the CEO of Tether, decided to channel his inner gladiator and declare Bitcoin undefeatable. Because why not claim invincibility in a market that's as volatile as a toddler on a sugar rush? Ardoino's bold proclamation came at a time when Bitcoin's price was doing the financial equivalent of a nap, kind of moving but not really causing any particular drama. Still, Tether's Bitcoin holdings are certainly no joke themselves. They've stacked up to nearly 80,000 Bitcoin, which is worth more than $9 billion. That's a strong commitment to Bitcoin, even when things are a little, meh on the price front. This, my friends, is the kind of behavior we all dream about when the price is, let's say, a little quiet. Tether is showing confidence while everyone is trying to figure out if they should buy, sell, or just, sit this one out. When the biggest stablecoin issuer is doubling down, though, we might want to pay attention. But of course, there are some folks who aren't quite ready to hang a gold medal around Bitcoin's neck just yet. They're cautioning that calling any asset undefeatable is asking for a little overconfidence and a very rude awakening. And just to make things interesting, we've got John Bollinger, the man who invented Bollinger Bands, throwing a little cold water on the whole situation. He pointed out a potential head fake in Bitcoin's price, meaning it could rise for a moment and then take a sudden nosedive. So, surprise, traders! On August 3rd, Bitcoin slid to $111,900 before springing back to over 115K. Talk about a market fakeout, right? It's like Bitcoin did a quick pirouette, caught everyone off guard, and then said, gotcha. Now, as much as Bitcoin is the strong and silent type, it's still got that temperamental streak, and volatility remains its favorite game to play. So while Arduino is calling Bitcoin undefeatable, Bollinger is handing out a beware of false moves caution sign. In the end, Bitcoin may be the strongest kid on the block, but we can't ignore the occasional tantrums and sudden bursts of volatility. Bitcoin is tough, but even tough guys have their moments, and that means you have to be ready for whatever curveball this crypto king decides to throw. We're taking a break, but when we're back, we got more blockchain report, including Arthur Hayes' latest prediction that Bitcoin's going to hit 250K this cycle. Why? Well, you're going to have to stay tuned to find out. We'll be right back. All right, welcome back to this morning's bull run. Arthur Hayes is back with some bold predictions that will make you reevaluate your 401k plan. He says the global financial system is heading straight for a head-on collision with reality, and that the only thing that will save us is a whopping $9 trillion in cash injections. His math, well, it's pretty simple. Without $9 trillion, the U.S. economy will implode, and the only asset that can absorb that kind of liquidity is Bitcoin. But here's the fun part. Hayes believes that Bitcoin could go all the way to 250K when the U.S. government prints the money needed to save the economy. Because let's face it, the government prints enough cash to bail out everything, you're going to need something finite to soak up all that fake money. Enter Bitcoin, the 21 million supply problem solver. Hayes isn't a stranger to big predictions, but this time his analysis cuts deep into the guts of the financial system. He's claiming that entities like Fannie Mae and Freddie Mac need $5 trillion just to keep the mortgage market from collapsing, plus another $4 trillion for bank bailouts. Now, is this a fairy tale? Maybe. Is it mathematically necessary? Definitely. Well, according to Hayes at least. In other words, if they don't print this cash, the economy is toast. So the U.S. is left with two choices. Either print $9 trillion or risk total economic meltdown. Not exactly a great set of options, but it's the reality Hayes believes is coming. And this isn't just a theory either. Hayes ties this all to foreign capital fleeing places like Taiwan, South Korea, and Singapore, meaning the U.S. could be the only place left standing, forcing the Fed to buy everything in sight. Now, in the end, the government will print the money, and Bitcoin, with its finite supply, will absorb the excess. If this liquidity flood happens, Hayes argues that Bitcoin could hit 250K and beyond. And while he's not the only one calling for a price like this, Tom Lee, Tim Draper, and a few others have also jumped on the 250K bandwagon, Hayes' analysis adds a little spice by making it feel like an inevitability rather than a forecast. So grab your popcorn. The only question left is, will Bitcoin really absorb $9 trillion, or will we be staring at one of the most absurd periods of currency inflation in modern history? Only time and Bitcoin's fixed supply will tell, I guess. And Cameron and Tyler Winklevoss have put their money, their Bitcoin, into American Bitcoin, the mining company co-founded by Donald Trump Jr. and Eric Trump. The investment was part of an oversubscribed private placement, and according to Hut 8 CEO Asher Ganoot, the twins paid in BTC instead of cash because fiat is just so last season. The amount wasn't disclosed, but it buys them a stake in a miner that's been busy this year. American Bitcoin formed through a merger with Griffin Digital Mining in an all-stock deal, picked up Hut 8's mining assets, and then went out and bought $2 billion worth of Bitcoin for its treasury. They also unveiled plans to go public on the NASDAQ because apparently Trump family plus Bitcoin mining wasn't already attention-grabbing enough. The Winklevoss brothers have long been vocal Bitcoin advocates, running the Gemini exchange and making strategic bets across the crypto ecosystem. This one is less about speculation and more about owning part of the infrastructure, the machines and megawatts that keep the Bitcoin network running and block rewards flowing. Now, the Trump connection, it cuts both ways. On one hand, it could help push Bitcoin further into the mainstream by tying it to a famous political brand. On the other hand, it is a magnet for regulatory curiosity and the usual polarization that comes with the Trump name. American Bitcoin's merger-driven scale-up fits a broader industry trend. Miners consolidating to cut costs and survive in a competitive post-halving environment. In July, mining companies had their most profitable month since April of 2024's halving, with 10 of 13 tracked miners outperforming Bitcoin's own price gains. At last check, Bitcoin was trading at around 116K, 5-ish. That's about 4% off its record high, which means these miners are operating in prime conditions, at least for now. Now, for the Winklevoss twins, this move signals confidence in Bitcoin's long-term economics and the value of the mining sector itself. Because when you believe in the network's future, sometimes you don't just stack sats, you buy the shovels. And Bitcoin has officially outpaced both Berkshire Hathaway and the S&P 500 so far in 2025, which means Warren Buffett, who once called Bitcoin probably rat poison squared and predicted crypto would come to a bad ending, has now missed out on another massive gain. Bitcoin's record performance this year has been fueled by ETF inflows, institutional buying, and a steady drip of pro-crypto legislation, including, of course, Trump's Genius Act for stablecoins and the White House's strategic Bitcoin reserve. Institutional adoption is booming, with 289 public companies now holding a combined 961,591 BTC. And scarcity is tightening, which for anyone who's not allergic to math tends to be bullish. Kathy Wood's ARK Invest still has a $1.5 million Bitcoin price target for 2030, which no longer feels like pure fantasy in this market. Analysts like Carl B. Manger have been openly mocking Buffett's refusal to even allocate 5% to Bitcoin, a move that would have had Berkshire beating indexes and ETFs across the board. Instead, Buffett stuck with his anti-crypto stance, missing a rally that has some calling this the early phase of Bitcoin's golden age. That optimism is helped along by projects like Bitcoin Hyper, which is pitching itself as Bitcoin's long overdue performance upgrade. The Layer 2 promises Solana-level speed thanks to a canonical bridge that mints Bitcoin onto its chain and a Solana virtual machine integration for high throughput smart contracts, all without compromising Bitcoin's security. It's currently in pre-sale at just about a cent, having already raised over $7 million, with backers betting it'll moon once it lists. But back to the main event, Bitcoin's current strength, even after dipping below 113K recently, has bulls predicting another leg up. The logic here is pretty straightforward, really. Institutional inflows are still coming, policy wins are favorable, and the scarcity clock, it keeps on ticking. Buffett can keep his ketchup and his Coca-Cola. Bitcoin's writing its own shareholder letter, and the headline is outperformed yet again.
Boy!
There you go, Flav. And Mike Novogratz, Galaxy Digital CEO and professional Bitcoin hype man, dropped by CNBC's Squawk Box to point out the obvious: as long as governments spend more than they make, which is always, Bitcoin's going to keep going up. He even made it sound like a long-term guarantee, saying, "We are not even close to fiscal responsibility." And as long as debt to GDP is climbing, Novogratz says Bitcoin will keep climbing too. That's his entire thesis. And the way the U.S. handles a budget, it's basically a forever bullish signal. This chat happened the same day that Bitcoin got the green light for 401k plans. Novogratz called it a monster pool of capital. Ryan Rasmussen at Bitwise slapped a number on it: 10 trillion in potential crypto exposure. Novogratz also pointed out that public companies have been making a bigger splash than expected in the Bitcoin space. Through equities, he says, they're pulling tons of money into the asset class. Then came the stablecoin talk. Novogratz says they'll be a big deal eventually, but right now, they're basically the motor oil of the crypto markets. keeping trading and overseas payments from seizing up. They're the oil that allows trading in the crypto markets and for overseas payments, Novogratz says. He thinks Tether and Circle will keep their crowns for now, but JP Morgan and other big names are suiting up for the fight. In the meantime, Novogratz's bottom line is pretty simple. If you're betting against Bitcoin, you're betting on the government suddenly becoming good with money. And good luck with that. We're taking a break. We'll be back with more Blockchain Report when we're back. Stay tuned.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
All right, it's time for a little AIAIO. Let's check out what our robot overlords are up to now. Sam Altman, well, he teased it with the Death Star meme, and now ChatGPT 5 is here to finish what the last four couldn't, which is make you stop wondering which model you should be using. This is OpenAI's first major release since ChatGPT 4 back in March of 2023. In the meantime, the company turned into a tech empire, Fortune 500 saturation, federal agency accounts, and 700 million users. ChatGPT 5's hook, well, no more GPT 4.0, 03, 04, Mini, or Pro. It just picks the horsepower for you. Alongside it, OpenAI is dropping customization, color schemes, personalities like cynic and nerd, Gmail and Google Calendar integration, and memories so it remembers your chats. Now businesses can now pour in their own data, locking themselves into ChatGPT like it's an exclusive cell phone plan. A bunch of older models are getting retired in the process. On benchmarks, GPT-5 kills it in some areas, but loses to Google's Gemini, Anthropic's Claude, and xAI Grok in others. And in perfect AI irony, OpenAI's own launch charts had wrong labels, bad numbers, and missing entries. But OpenAI knows most people don't care. They care that it feels better to use. That's the same trick that made ChatGPT blow up. Take the tech, wrap it in an interface people actually like, and then hook them for life. OpenAI is framing this not as artificial general intelligence, but artificial general assistance. Or, in other words, before they run the economy, they want to run your inbox and your calendar and every workflow you ever touch. Because in the AI race, you don't have to be the smartest, you just have to be the one people never bother to log out of. All right, so we're going to wrap up today's show with a little bullish, bearish, or BS. So let's run the stinger here, boys. Get this thing moving. All right, so it's time for a little bullish, bearish, or BS. This is the part of the show where we recap our top stories of the day and decide if it's looking good, bad, or just a bunch of BS for our beloved Bitcoin. First up, Donald Trump has nominated Stephen Mirren, an economist with a history of supporting Bitcoin ETFs, to a temporary position on the Federal Reserve Board with potential influence over U.S. monetary policy until 2026. Verdict on this? It's bullish, right? I mean, having a pro-Bitcoin economist at the Fed could signal a more favorable stance on crypto, which may encourage further institutional adoption. This could create long-term positive pressure on Bitcoin's price, especially as the regulatory landscape becomes more and more welcoming. A pro-Bitcoin voice at the Fed could push Bitcoin even further into the mainstream, so therefore, I'm feeling bullish on it. Next up, Greenidge Mining, a NASDAQ-listed Bitcoin mining company, has sold its Mississippi mining site due to the pressure of U.S. tariffs, which are making it more expensive to import mining equipment. Ooh, I'm bearish. I mean, the increased difficulty for U.S. miners to import equipment due to tariffs could result in reduced mining activity and lower hash rates, thanks a lot, tariffs, causing Bitcoin sell pressure to rise in the short term. This might cause some downward price action in the immediate future. Tariffs are hurting miners, and they're potentially leading to short-term price pressure for Bitcoin. Thanks a lot, Don Juan. Get those tariffs out of here.
You are fake news.
So, one bullish. Get out of here. One bullish, one bearish, one more to go. Last up, Elon Musk reposted the iconic Magic Internet Money meme, a low-res Bitcoin cartoon, now animated using AI, which has sparked attention from the crypto community and meme lovers alike. I'm bullish on this, right? It's kind of silly, but Musk's influence continues to fuel Bitcoin sentiment.
Everything's
and
computer.
His antics with memes often stir up interest in crypto spaces. This may drive positive sentiment toward Bitcoin, further cementing its cultural relevance and nudging the price further upward. I mean, Musk's memes, the revival of these keeps Bitcoin in the cultural spotlight, and that could boost sentiment regardless of how silly it might feel. All right, so today's final score, we got 2 bullish, 1 bearish, 0 BS, which means today is bullish. Our stories are showing positive momentum for Bitcoin with some potential hurdles on the horizon. The general trend is definitely in the right direction. So Bitcoin is certainly feeling the love as we wrap up this week. As always, gang, thank you so much for tuning in to the Blockchain Report. Don't forget to like, follow, and subscribe to RoxomTV and yours truly at Hank at RoxomTV on all platforms that matter. We're going to take a break for the weekend, and you should too, but we'll be back Monday morning with more Bitcoin price action so you know what to expect in your cold wallets. All right, we'll see you then, and until then, have a nice weekend and hodl on.